Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon is Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss Nasdaq-100 performance, trends that we're seeing in the Nasdaq volatility index, or what we call VOLQ. Of course, we'll touch on Netflix earnings, which will certainly influence the Nasdaq 100 after the close today. Shawn, it's great to see you as always. Welcome back to Trade Talks. Let's take a look at your first chart here and get some fresh levels to watch on the Nasdaq 100.
I mean, the level I'm watching now is actually right where we're trading. I want to see what happens here. If maybe we get some more earnings and potentially Netflix, which we're going to talk about here in a second, it could maybe be that catalyst to bump us well above that 12,200 level and break through what had been a previous pretty well-defined resistance level. Breaking above that and being able to maintain that level could then turn that 12,200 price point into support and could maybe lay the groundwork for a little bit of a recovery here or some sustained movements to the upside. I think it's going to be important, though, to get through a little bit more earnings. And I really wonder today if the yield curve is sort of uninverting, so to speak. You're seeing some movement higher in those longer rates, which maybe you would say aren't these big growth stocks a little bit more sensitive to rising rates. I think what this is saying is a little bit more of that fear coming out of the prospects for future growth here. And I know there's a lot of factors at play in that, but I almost wonder if that and the dollar softening is actually giving a little bit of a boost to the Nasdaq 100 today and indices across the board. But I still think we can get some follow through in these earnings reports coming up. That could certainly make things interesting here to watch where we can go on the upside.
Right. Shawn, I'm sure everyone is asking you, is the bad news priced in? Have we hit a bottom? Is this the start of a longer term bullish trend or just a bear relief rally? But let's take a look at Nasdaq volatility index, Nasdaq 100 volatility index, VOLQ. Perhaps the volatility markets can tell us something about the trend that we could see over the next few weeks.
We are seeing that, and if you look at VOLQ is also pulled back and is hitting a level that it previously would sort of bounce off of and turn around higher. So that's why I think we're still in this sort of range bound trade, but it looks like we're really close to breaking out. And I think one thing is, as we get more and more earnings out, I think the nightmare scenario for outlooks getting dialed down, just sort of Armageddon from guidance out of some of these companies, especially some of these big multinational growth type companies, we're getting some caution. We've gotten a little bit of a lowering of expectations in certain areas, but I don't think we're seeing anything catastrophic. So I think just that black swan or tail event type of a scenario for earnings here is getting pulled off the table, and it's bringing some investors in from the sideline. And I think VOLQ, to me, is going to be what I'm going to have my eye on to see if we can get VOLQ to break down and move closer to that 25 handle, somewhere in the mid 20s. To me, a breakdown below the 28 level and a sustained breakdown below that level, to me, would indicate that there is a little bit more optimism. Some of that fear is coming out of the market here for investors, and I think that can maybe be the next sign to see if this rally has legs.
Well, and Shawn, to your point, we're going to talk about Netflix in just a minute here, but guidance is really what's key. How these CEOs and CFOs perceive the global economy. Perhaps Apple took the Band-Aid off yesterday. We are slowing in hiring. We're slowing on spending with some growth, and they're being prepared for in terms of what they think the economy could offer over the next couple of quarters. And that might not necessarily be such a bad thing if they're proactively planning and might have recognized, okay, we overhired, or we're at the levels that we need to be as we see if the economy is going to be soft or not. So maybe taking the Band-Aid off and getting this out in the open could be that underlying catalyst. So what are you going to be listening for out of Netflix specific to the company and perhaps more macro?
So one, I think for Netflix, it is going to be looking at how they're seeing subscriber growth. I think you actually might get a little bit of a read through on just the consumer and what they're doing. I think if you're looking at you're concerned about inflation or your monthly budget, Netflix might be one of the first places you look. But there's a lot going on with Netflix, outside of that consumer or the subscriber growth segment, which I still think will get a lot of scrutiny. But they're making a lot of changes to their business model. They're introducing some ad-supported revenue streams. They're also taking a look at, unfortunately for some people, piggybacking off of your friends or your cat's babysitters or your dog's babysitters Netflix account. They're going to start looking at that as well, and that might actually help blunt the impact of any sort of just slowing down of subscriber growth. If now you have some of those subscribers who are having to split off and finally get their own subscriptions, that can actually be something that's interesting to see. But I think from a more macro sense, I think it will be interesting to look at on the international front. The international growth story for Netflix is something a lot of investors and analysts have been focused on. And right now, the global economy, there's a lot of uncertainty around the direction of the global economy. So this might be an interesting way just to see how things are going on, at least on the consumer side of things overseas. I like seeing companies with big multinational footprints like this that are something a little bit more tied towards the individual than say some of these large CapEx type of projects or big industrial conglomerates. Netflix is giving you an interesting read through on the international consumer and the global consumer appetite for going out there and making maybe a little bit more of a discretionary type of a purchase. So definitely going to be interesting. I would note out the implied volatility measure, which is sort of that gauge for uncertainty or the potential for a post-earnings move relative to where we've seen it historically. You'd have to go back to 2015 to see implied volatility, at least that 30-day measure, up at these levels. So I think there is a lot of interest from investors, analysts, and a lot of uncertainty around exactly where Netflix can break after this. So this could be a really interesting name to watch into and out of earnings.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.